This is the moment we have been preparing for. This is the moment that future generations will study when they analyze the collapse of the paper currency system. I need you to understand what you are witnessing right now. I need you to capture this moment because you are watching the destruction of a 5-decade manipulation scheme in real time. It is Saturday, January 25th, 2025. And the psychological barrier that has suppressed the real value of silver for generations has finally been obliterated. The wall is gone. The $100 threshold is shattered. We just witnessed the COMEX trading platform, the electronic heartbeat of the global precious metals market, explode through the resistance level that the banking cartel has protected with every weapon in their arsenal. The price touched a peak of 102.47. For the past several weeks, they deployed everything they had against this number. They deployed naked short contracts. They deployed coordinated selling. They deployed mainstream media narratives. They attempted to build a barrier at $96. It crumbled. They attempted to construct a fortress at $99. It disintegrated. And today the market simply marched through their defenses like they were made of paper. The short position holders, the institutional manipulators who have controlled this market since the Reagan administration, are currently watching their terminals in complete panic. Because at $102, their situation is not hypothetical anymore. It is not a spreadsheet projection. It is mathematical annihilation. It is the threshold where the margin liability surpasses the total equity of the institution. Their entire careers are collapsing before their eyes. But if you believe $102 is remarkable, you are analyzing the wrong data stream. You are watching the tail of the dragon, not the head. The head is in China. While London is cautiously probing the triple-digit territory, Asia has already smashed the gates and is sprinting forward. We have the settlement numbers from the Shanghai Futures Exchange, and they are absolutely mind-blowing. Silver in Shanghai surged 9.2% in a single trading day. The closing price is $116.89. In yuan terms, that translates to 26,341 per kilogram. They are offering a premium of nearly $15 above the Western spot quotation. Do you comprehend what this creates in the global marketplace? It is a gravitational pull. It is yanking the West into the triple-digit zone whether they want to go or not. Every single arbitrage bot in the financial system is executing the same calculation. Purchase London at 102, deliver Shanghai at 116. That represents a guaranteed return of 13% immediately. There is not sufficient capital in the global banking system to prevent that transaction. The cartel in London can fabricate all the derivative contracts they desire, but they cannot stop the actual metal from migrating to the superior price. They are attempting to defy economic law. They are attempting to suppress the valuation while the entire Eastern Hemisphere is elevating it upward. And today, their strength finally exhausted. So why is this occurring today? Why did the barrier collapse on an ordinary Saturday in January? Because the marketplace finally understood that the insolvency of the banking institutions is tangible. The institutional money recognizes that JP Morgan and the rest are cornered. They recognize that for every dollar the quotation increases, the banks hemorrhage billions. And when a predator detects vulnerability, it strikes. The sovereign funds, the ultra-high net worth family offices, and the national central banks are entering the battle. They are amplifying the pressure. They are crushing the short sellers. This is no longer simply about monetary debasement or fundamental supply-demand dynamics. This is an execution. The marketplace is attempting to liquidate the manipulators. And based on the price movement, they are achieving their objective. But there is something else transpiring today that is even more catastrophic than the valuation of silver. There is an indicator flashing on the economic dashboard that we have not observed in 5 decades. Typically, when silver goes parabolic, when the crisis trade detonates, the equity markets collapse. Typically, investors liquidate their equities to acquire gold and silver. It represents a capital rotation from speculation to preservation. But today the S&P 500 is ascending. Today, the technology sector is positive. Today, gold has reached a new all-time peak of 5,024, and the stock market is celebrating simultaneously. This is impossible. This contradicts every principle of conventional financial theory. Speculation and preservation are not supposed to appreciate concurrently unless the appreciation is not genuine, unless the dollar is deteriorating so rapidly that it makes everything appear to be increasing. We are observing the most destructive economic event known to civilization. We are observing the initiation of the hyperinflationary expansion. We need to discuss the impossible indicator. We need to clarify why a rising equity market is actually evidence of the catastrophe. Let's transition to part 2. Let's examine the crack-up boom. This is the segment of the analysis where I need you to stop analyzing like a speculator and start preparing like someone facing systemic collapse, because what is manifesting on the terminal right now is not a market appreciation, it is an alarm. If you examine the control panel of the global financial system, you will observe a critical warning indicator that has not activated since the inflationary crisis of the 1970s, and perhaps not even during that period. It is the impossible indicator. Historically, the financial universe operates on an inverse relationship. On one side, you have speculative assets, equities, technology corporations, the Nasdaq Composite. These are the instruments you acquire when the economy is expanding and you feel confident. On the opposite side, you have defensive assets, gold, silver, government bonds. These are the instruments you acquire when you are terrified, when the economy is imploding, and you simply want to preserve your capital. When one category appreciates, the other category depreciates. That is the fundamental rule. That is how the mechanism is designed. But today, the mechanism is malfunctioning. Today, the inverse relationship has completely broken. We are watching gold reach a new all-time peak of $5,124. We are watching silver demolish the $100 threshold. And simultaneously, at the precise same moment, we are watching the S&P 500 climb to unprecedented levels. We are watching the industrial average explode higher. Do you comprehend how alarming that is? If equities are appreciating, it suggests people are optimistic about economic expansion, correct? But if gold is ascending to $5,000, it suggests people are terrified about economic survival. They cannot both be accurate unless neither of them are appreciating, unless the assets are stationary and the foundation beneath them is collapsing. This is what a hyperinflationary meltdown appears like. We are entering what the Austrian economic theorist Ludwig von Mises identified as the crack-up boom. It is the instant when the population realizes that the currency itself, the dollar, the euro, the pound, is expiring. When the currency expires, it functions like a descending elevator. Inside the elevator, it appears like the floor indicators are ascending, level 10, level 20, level 100. But you are not ascending. The structure is disintegrating around you. The valuation of equities is increasing not because the corporations are generating superior revenue, but because the dollar you utilize to purchase the equity is deteriorating in value every 60 minutes. The valuation of gold is increasing because it is the only constant in a universe of variables. This is the genuine emergency. If this were a standard market environment, the spike in silver to $102 would initiate a panic liquidation in the equity market. Margin obligations would compel investment firms to dump Microsoft and Tesla to cover their silver short positions. But that is not occurring. Why? Because there is so much liquidity, so much recently manufactured worthless fiat currency flooding the system that it is elevating everything simultaneously. It is a monetary tsunami. The Federal Reserve has lost command of the Treasury market. The government is manufacturing trillions simply to service the interest on the national debt, and that currency has to migrate somewhere. It is flowing into equities. It is flowing into gold. It is flowing into silver. It is evacuating the savings account. The market is collectively screaming, "I do not care what I acquire. Just extract me from cash." This universal rally is the signature of a currency entering its terminal stage. We observed it in Weimar Germany in the 1920s. The equity market ascended to astronomical levels in mark terms, while the population suffered in the streets. We observed it in Zimbabwe. The equity market was the superior performer globally immediately before the currency collapsed to worthlessness. And now we are observing it in America. The appreciation in equities is an illusion. It is a hallucination. You are not accumulating wealth if your investment portfolio increases 10%, but the expense of groceries and energy increases 20%. You are losing purchasing capacity while experiencing prosperity. That is the deception. That is the temptation of the crack-up boom. It makes you feel like a brilliant investor right until the instant you attempt to purchase essential goods. So do not observe the positive figures on the equity ticker and conclude the economy is robust. The economy is deceased. The patient has flatlined. The positive figures are simply the consequence of the physicians injecting infinite stimulus into the corpse. And the ultimate evidence of this, the definitive proof that demonstrates this is a liquidity event and not an expansion event, is the absolute magnitude of currency that has been manufactured in the previous 12 months. We need to examine the money printer. We need to examine the global supply of fiat currency because that is the accelerant for this conflagration. Why is everything rallying? Because the world is submerged in paper. Let's transition to part 3. Let's examine the global activation of the printing mechanism. So we have established the crime scene. We have the impossible indicator where equities and gold are appreciating together. We have silver demolishing $100 while the S&P 500 reaches unprecedented peaks. But every crime requires a weapon. And in this scenario, the weapon is located in the vault of every central bank on the globe. The weapon is the printing mechanism. If you want to comprehend why asset valuations are detonating, why residential properties, equities, gold, silver, and even pre-owned vehicles are appreciating simultaneously, it is not because these items are suddenly becoming more valuable. A residential property is still simply a construction of timber and concrete. An equity is still simply a fractional ownership of a corporation. They are not transforming. What is transforming is the measurement instrument. The standard you are utilizing to measure value, the currency, is contracting. And it is contracting because the central banks are inundating the world with an ocean of new, worthless paper. We are witnessing the global activation of the money printer goes brrr phenomenon. But this time it is not humorous. It is catastrophic. Let's examine the statistics emerging from China, and while everyone concentrates on their silver accumulation, nobody is discussing how they are financing it. China's M2 monetary supply, the aggregate amount of currency and demand deposits in the system, has just reached an all-time maximum. They are injecting trillions of yuan into their economy to prevent the property sector collapse. They are essentially attempting to keep a sinking vessel afloat by pumping water into the hull. And where does that currency migrate? It flows into commodities. It flows into silver. Now examine the United States. The Federal Reserve claims they are combating inflation. That is deception. If you examine the balance sheet, if you examine the government expenditure, the United States has expanded its monetary supply by trillions of dollars in the previous 24 months alone. They are operating a deficit of $2 trillion annually during peacetime. That currency does not exist. They have to manufacture it to expend it. And when you manufacture $2 trillion and inject it into the economy, you dilute every single dollar that is currently in your possession. You are being robbed. Every time the equity market appreciates because of stimulus, it is simply the government extracting your wealth via inflation and transferring it to Wall Street. But the most catastrophic examples are the ones that demonstrate our future. Examine Argentina, examine Turkey. In those nations, the monetary supply has expanded by 70% in less than 12 months. And what occurred to their equity markets? They appreciated. The Turkish equity market was one of the superior performers globally in nominal terms. But did the Turkish population accumulate wealth? No. They were obliterated because while their equities appreciated 50%, the expense of food appreciated 100%. That is the deception. That is precisely what is transpiring in the Western world right now. We are simply at the beginning of the Turkification of the American economy. There is so much liquidity, so much raw, unbacked currency flooding the system that it is elevating every vessel in the harbor. The damaged vessels, the deteriorating vessels, the luxury yachts, they are all ascending. But the water they are floating on is contaminated. This liquidity flood creates a distortion field. It makes you believe you are a brilliant investor. You examine your retirement account and observe it reaching all-time maximums and you think, I am performing excellently. You are not performing excellently. You are standing on a treadmill that is accelerating. You have to sprint faster and faster simply to remain in the identical position. The appreciation in silver to $102 is the only honest indicator in the entire market. Silver is not appreciating because of speculation. Silver is appreciating because it requires 102 of your diluted, debased dollars to acquire the identical ounce of metal that previously cost 20. Silver is the thermometer informing you that the patient has a fever of 105 degrees. The equity market is the physician attempting to inform you the fever is bullish. So do not mistake this liquidity for prosperity. It is the opposite of prosperity. It is debt. It is devaluation. And as this flood of currency searches for a destination, it is creating bizarre anomalies. It is breaking correlations that have existed for decades, and it is creating a market where the new technology is suddenly performing very differently from the established money. We need to discuss the elephant in the room that is remarkably silent today. We need to discuss Bitcoin. Why in the middle of this inflationary expansion is the digital gold lagging behind the physical gold? Why is the market selecting atoms over bits? We are entering uncharted territory. Let's transition to part 4. Let's examine the new floor and the peculiar behavior of cryptocurrency. We are officially operating in uncharted territory. The roadmap we have utilized for the previous 15 years, the roadmap that declares technology as dominant and digital is the future, has just been discarded. Because in the middle of this historic liquidity-fueled expansion, there is one asset that is strangely quiet. There is one dog that is not barking. And we need to discuss Bitcoin. For a decade, the narrative has been transparent. Bitcoin is the digital gold. It is the fastest vehicle in the race. If the dollar collapses, Bitcoin ascends to astronomical levels. But examine the scoreboard today. Gold is at an all-time peak of $5,124. Silver is demolishing $100. Equities are vertical. But Bitcoin is lagging. It is stumbling. It is performing like people forgot it exists. Why? Why, in the greatest inflation event of our lifetimes, is the hardest currency ever manufactured losing ground to a metallic element? The answer reveals everything you need to comprehend about the nature of this crisis. This is not a speculative mania. This is a physical panic. When the situation deteriorates, when the global supply chains are fragmenting and the currencies are burning, the market retreats to the most fundamental form of value. It retreats to atoms, not bits. Investors are realizing that you cannot construct a solar panel with Bitcoin. You cannot insert a Bitcoin in a ballistic missile. You cannot utilize a Bitcoin to conduct electricity in an electric vehicle battery. Bitcoin is digital energy, affirmative, but silver is physical necessity. And right now, the world is deficient in necessities. The institutional money is making a calculated decision. They are rotating out of the speculative digital assets and accumulating the defensive physical assets. They are selecting the item that has 5,000 years of history over the item that has 15. This lag in cryptocurrency is the ultimate evidence that we are not in a technology bubble. We are in a commodity supercycle. The capital is flowing from the cloud back to the earth. It is flowing from the intangible to the tangible. And this shift brings us back to the most dangerous figure on the board. While the digital world sleeps, the physical world is establishing a price target that the paper market simply cannot ignore. We have discussed the $100 break in London, but we have not discussed sufficiently about the magnet that is pulling it there. We need to discuss the genuine floor. We need to discuss the valuation in Shanghai, which is currently trading $15 higher than London. Because that gap, that massive undeniable spread, is the fuse that is going to detonate the COMEX apart. The US paper valuation has no alternative. It is existing on borrowed time. Let's transition to part 5. Let's examine the Shanghai target. While the cryptocurrency market is confused and the equity market is hallucinating, there is one indicator that is crystal transparent. It is the indicator coming from the east, and it is the reason why the celebration at $102 is premature. You are observing the milestone of 100, but the market is already observing the destination of 116. We need to discuss the genuine floor. We need to discuss the massive, undeniable dislocation between the valuation in London and the valuation in Shanghai, because right now we are witnessing an arbitrage opportunity so enormous that it effectively guarantees the destruction of the COMEX short sellers. Let's examine the mathematics. In London, on the electronic exchange, you can theoretically acquire a contract for 102 or 47. But in Shanghai, that identical ounce of silver, the exact same chemical element, is trading for $116.89. That is a differential of $14.42 per ounce. Do you comprehend what that signifies? It signifies the Western valuation is incorrect. It signifies the US dollar valuation is fabrication. In a functioning global marketplace, a spread like that exists for milliseconds. High-frequency traders acquire the low and liquidate the high until the valuations match. But this spread has existed for days, and it is widening. This informs us that the conduit between the West and the East is obstructed. It informs us that the physical metal cannot migrate fast enough to satisfy the appetite of the Chinese marketplace. But more importantly, it functions as a giant industrial strength vacuum mechanism. Every single ounce of silver that is extracted in Peru or refined in Switzerland or vaulted in London is examining those two valuations. Where are you going to send your metal? To London for $100 or to Shanghai for 116? The answer is obvious. The metal flows to the highest bidder. The metal flows east, and this leaves London completely starved of inventory. This is why the short sellers are doomed. They are attempting to cover their short positions in a marketplace that is being drained dry by a competitor who is willing to compensate 14% more. The US paper valuation has no alternative. It is existing on borrowed time. It cannot remain at $102 while the genuine world compensates $116. It has to gap upward. We are approaching a morning where you will awaken, verify your phone, and observe that silver did not trade at 103 or 104. You will observe that it opened at 115. It will simply skip the figures in between. It will teleport to meet the Shanghai valuation because the sellers will simply refuse to liquidate for anything less. This is the definition of a seller's strike. Why would anyone liquidate silver in America today? It is financial suicide. If you possess silver, you are possessing the only ticket out of the burning theater. The Shanghai valuation is the exit sign, and the US valuation is simply the smoke filling the room. The banking cartel recognizes this. They recognize the arbitrage is liquidating them. They recognize they are fighting a war on two fronts, the insolvency of their balance sheets and the physical drain to China. They are out of ammunition. The $100 break was their final defeat. Now they are simply praying for a miracle that is not coming. So this brings us to the final conclusion. We have observed the impossible indicator of equities ascending with gold. We have observed the global money printer destroying the currency. We have observed the Shanghai vacuum establishing the genuine valuation at $116. The picture is complete. The verdict is undeniable. This is not a drill. This is not a standard bull market. This is a regime transformation. We need to inform you precisely what to do with your cash before it burns a hole in your possession. Let's transition to part 6. Let's deliver the verdict. So here's the verdict. We have presented the evidence. We have demonstrated the impossible indicator of the equity market ascending in lockstep with gold. We have demonstrated the Shanghai vacuum extracting the physical metal out of the West at 116. And we have demonstrated the banking cartel losing their final line of defense as silver demolished the $100 threshold on the global exchange. The diagnosis is terrifyingly simple. The patient is not getting stronger. The patient is expiring. And the physicians, the central bankers, have decided to inject the patient full of so much adrenaline that the heart is going to explode. You have to comprehend that what we are observing today is not a bull market. A bull market is when an asset gains value because the economy is expanding and people are prosperous. This is a currency collapse. This is a crack-up boom. Silver is not ascending to $100 because the industrial demand is elevated, even though it is. Silver is ascending to $100 because the dollar is descending to zero. The measuring stick is melting in your hand. The banking cartel did not lose command of silver. They lost command of the dollar. They had to select between collapsing the equity market or destroying the currency. Today, observing the S&P 500 ascending alongside gold, we recognize precisely what selection they made. They selected the printer. They selected to sacrifice your purchasing capacity to preserve their banking system. So $100 is no longer the ceiling. It is the floor. It is the rearview mirror. Do not anchor your consciousness to these figures. Do not think, I will liquidate at 100. If you liquidate at 100 for cash, you are trading a scarce asset for a dying liability. You are jumping off the lifeboat and swimming back to the sinking Titanic because you think the Titanic appears large. It does not matter how large it is descending. The window to exchange your paper for metal is closing, not because the shops are closing, but because the valuation is moving faster than your bank transfer can clear. While you wait 3 days for your funds to settle, silver moves $10. While you debate the premium, Shanghai moves to 125. You are operating a race against a printing mechanism that can manufacture trillions in a second. You cannot win that race with cash. You can only win it by possessing assets that cannot be manufactured. We are witnessing the termination of the fiat experiment. The volatility you observe is the death rattle of the obsolete system. The ascending equity market is the deception. The ascending gold and silver are the escape mechanism. Do not get confused by the distraction. Do not let the positive candles in the equity ticker lull you into a false sense of security. The water is ascending. The barrier has shattered. Extract yourself from cash. Extract yourself from debt. Enter the lifeboat. This is prime capital. The barrier is shattered. The printer is activated. Hold firm.